Okay, let's look at what happens. I want to look at what happens if we understate or overstate our beginning inventory. In this case, let's say we understated it. So we thought our beginning inventory was 100 when in fact it was 200. The actual beginning inventory was 200. As you can see, our purchases remain the same. That doesn't change. So we thought we had cost of goods available for sale of 400 when in fact it was 500. Our ending inventory was 100 in both cases. In the case where the amount we stated for cost of goods sold was 300, it was actually 400. So this shows you if we understate our beginning inventory, we end up understating our cost of goods sold. Which means, let's say we had revenues of 500 and we have cost of goods sold of 300. That's what we're stating. We end up with net income of 200. If in fact we had stated our cost of goods sold correctly by using the correct beginning inventory amount, our net income would have only been 100. So you can see what we've done here. We end up understating our cost of goods sold, and we end up overstating our net income. Let's say it's the reverse, and the actual amount is 100, and the amount we've stated, and this again is for beginning inventory, is 200. In this case, we have overstated our cost of goods sold, right? It was actually only 300. We thought it was 400. So we have net income of 100 from our information, when in fact, our actual net income would have been 200 had we used the correct amount. So in this case, if the amount we state with our beginning inventory, if we overstate it, we end up overstating cost of goods sold, and because we do that, we end up understating our net income. So those are the ramifications. Now we're going to look at what happens with ending inventory if it's misstated. In our case, our actual ending inventory balance was 200. We thought it was 100, so we understated our ending inventory. Everything else is the same. Beginning inventory is the same, purchases, cost of goods available. What happens if we state ending inventory, if we understate it? We end up overstating cost of goods sold. We think our cost of goods sold was 400. In fact, it was 300. By doing this, we think our net income is $100. Our net income, if we had used the appropriate amount, would have actually been $200. So we understated net income. If we do this in reverse, now in this case, we thought our ending inventory was 200, when in fact it was 100. Now we've overstated our ending inventory. The impact of this is we understate our cost of goods sold, and we're going to overstate our net income. We think our net income is 200, when in fact our net income should have been 100. So that's what happens. Also, if we do under or overstate our ending inventory, it will carry over to the next year, and it will have the opposite impact on the following year. Okay, now we're going to talk about the perpetual inventory system, and there's a little bit of a difference here. The big difference is that instead of looking at cost of goods sold at the end of the period, we're looking at it every time we make a sale. So we're going to calculate things slightly differently. In the beginning, our beginning date, we have our beginning inventory, right? And our beginning inventory, we have 100 units at 20 per unit, so our beginning inventory is 2,000. Let's look at what happens when we make our July 8th purchases. We purchased 320 items at $24 an item for a total of $7,680. So now, if you look at our balance in units and cost, we have the 2,000, right? We have the 100 units at $20. And we also have 320 units at $24. The total with all of this is the $76.80 plus the 2,000. Our total inventory right now is $96.80. Okay, now what happens on November 1st, we make a sale and we sell 400 items. So here we are on November 1st, we've made a sale of 400 items. So now we have to account for cost of goods sold. Our cost of goods sold is going to be, again, we're doing FIFO, so we're going to consider the first items that we purchased are the first items that we sell. So our cost of goods sold is going to be the 100 items at $20, and it is going to be 300 items at $24. So the total for these two items is $9,200. We then go on November 16th to making another purchase of 180 items at $26 for a total cost of $46.80. Okay? If we go back here on November 1st, we had sold 400 units. We had 420. So we had 20 units left at $24. So our inventory at that time was 480. Now that we've made this additional purchase, we have the 20 units at $24 left, and we have 180 units at $26 left. So right now, our ending inventory is $5,160. So you do have to take it step by step when you're looking at the perpetual rather than the periodic. And now we'll move on to LIFO.